Do not put your money into a high yield savings account until you know these 3 critical things. Lessons that helped me save my first $100,000 and build a real estate portfolio worth over $1.5 million in just under 2 years. I'm Rosie. You just gotta do it scared. Okay, before you dive into a high yield savings account, let me share 3 critical things that I've learned from leveraging these accounts to build my real estate portfolio. These lessons could save you a costly mistake. You've heard a lot about high yield savings accounts and them offering really good interest rates. But did you know that the interest rate is actually not guaranteed? So whatever the Federal Reserve decides about interest rates will actually directly impact your high yield savings account's interest rate. Right now, getting a high yield savings account is all the buzz. There are still some offering over 5% in interest, which is very strong. That's why so many people are choosing them over regular or traditional savings accounts and even some investment. But here's the thing, if the Fed reduces rate, the interest rate on your high yield savings account is also going to come down. The Feds usually reduce the rates to try to help give the economy a little boost. So when you hear that the Feds will be meeting to decide to reduce rates, what that translates is they're doing that to make loans cheaper so people and businesses can spend more. So while that might help with reducing inflation, well, the interest rate on your high yield savings account is going to take a little hit. Now, would the rates on your high yield savings account ever drop as low as the interest rates on the savings account that you get from the bank from around the corner? Probably not. Generally, high yield savings accounts offer higher interest rate because of their business model. They tend to not have brick and mortar banks as you see with Bank of America, Santander, PNC, whatever it might be. And that is supposed to help in the interest rate that they are able to offer to you. So keep in mind, the rates are not locked in and it's always good to know how it can change. And by the way, this ties directly into the 3rd thing that you need to know about this high yield savings account thing. So stay tuned. It could seriously impact how you manage your saving. Now let's talk about the 2nd thing you gotta know about before you get into a high yield savings account. Not all high yield savings accounts are created equal. Hear me out. Since the pandemic, since everybody was on shutdown, lockdown, our brains was going cuckoo. Anyways, since the pandemic, with interest rates rising, a lot of companies have come into this space. So many of these companies are only just a few years old. I call them companies and not banks because some of these companies might not technically qualify to be a bank. Instead, they might be what you call fintech, which is a financial technology company. So these fintechs can still legally offer high yield savings account, but they might not have the same track record or experience in managing money that traditional banks will have. So for example, companies like T-Mobile Money, and that's by T-Mobile, and Wealthfront started offering high yield savings account, even though they're not traditional banks. But with the market crash that happened in 07, 08, companies that have been established for decades came crumbling down. Age in an industry is an important factor, but I don't think it's the only factor. You just gotta be wise with your dollars. Now, if you get some ad from some doodly-doo side company that's offering some crazy high interest rates, I mean, come on. You're just trying to, lose your money, okay? You gotta be wise. This actually happens a lot with ETFs. So you gotta do your homework. With a high yield savings account, check if they're FDIC insured. That's very important. FDIC insurance is what protects your money, typically up to $250,000 if the company was to say go out of business. So what some of these fintech companies do is they partner with larger banks so that they can leverage the experience of the well-established bank within the space so that they can offer you the high yield savings account at a higher interest rate and be able to also offer you FDIC insurance. So if you're looking at companies like this, now you got to vet both the fintech company and the parent company or the company that they partnered with, the bank that they partnered with. And I have put in serious sweat equity to make more videos about high yield savings accounts for you, sis. So I'll put it at the end for you. Stay tuned. But what are you waiting for? You gotta click and come in, subscribe, and come into the family. What are you standing outside the door waiting for? Peeking in like this, peeking in when we are here, putting in data and stressing to bring you information.
You don't know what is going on. We are making money, you are sleeping. You don't know what is going on, eh?
Please subscribe. Like I said, a lot of these high yield savings accounts are newer, so be aware of that. And some will not officially be considered as banks, but they tend to partner with more established banks. Overall, you just got to be careful on where your money is being kept, making sure that there's some level of insurance where your money is going, because even big banks can fail. Now let's get into the 3rd thing that you gotta know before getting into these high yield savings accounts. Now this one can be a bit tricky, so I need you to come closer, sis. See, your high yield savings account might not beat inflation. What do I mean? Your money could lose value over time. Right now, the average high yield savings account is offering about 5% in interest, which is pretty high. But here's the catch. If the Fed lowers rates even more, which we talked about earlier, your high yield savings account rates will likely drop. Now, if inflation stays about the same, right now it's about 3%, you'd basically be breaking even. Your money wouldn't really be growing much because it'll just be keeping up with rising prices. Let's do some quick maths. I like it simple. Keep it quick, simple math. Stay with me, sis. Are we here? Are we here? Stay with me. Now, if you were to put $10,000 in a high yield savings account that's earning you 5%, your yearly interest earned will be $500. Now remember, with inflation about 3%, your money really only grew about $200. Because remember, higher increasing prices with inflation, the value of your money is reducing. Now, with the way grocery prices are just acting crazy, if inflation acts crazy and increases to 6%, and now your high yield savings account interest rate drop, you in turn actually could be losing money with your money just sitting in a savings account. That's why you got to keep an eye on these rates. I only use my high yield savings account to keep maybe 3 to 5 months worth of expenses in there, and then everything else, my money's working for me in the different investment assets or vehicles that I have. So what kind of investments can you consider if inflation is catching up to the interest rate that you're actually getting on your high yield savings account? You can look at investing in a dividend fund like Vanguard's High Dividend Yield ETF. Its symbol is VYM. Don't tell me I never gave you a point on where to start and getting your research on to start investing your money. So this particular dividend fund historically has returned about 3 to 4% each year, and you still own the actual stocks in the fund that you choose to buy. This means your money is working for you and it's growing over time instead of just sitting as cash to lose its value. If you're okay with a little bit of risk and want to see some growth, dividend fund can give you more returns and value in the long run. And have I made videos about top quality dividend ETFs to look into? Of course I have. Of course I have for you. I'll put it at the end, sis, so please stay tuned. So when you're thinking about short-term needs, a high yield savings account could be the better option for you. Remember, I said I keep about 3 to 5 months of expenses in my high yield savings account. The returns are great. I'm able to get access to cash immediately if needed, and also continue to invest in the market. Right now, a good high yield savings account can still outpace inflation. So it's preserving and even slightly growing your money's purchasing power. All right, sis, did you stick with me? Because this is very important. Here's what you need to remember about high yield savings accounts. The strong interest rates of high yield savings accounts can actually go down. Not all high yield savings accounts are the same. Some of the companies are actually fintechs, not banks. Your money could lose value over time if inflation outpaces the interest rate of your high yield savings account. Now here's what you should do. Check your current savings rate at the local bank where you have your savings account. Just call them and ask them what the interest rate on your savings account is, and then compare it to the different high yield savings accounts that are currently being offered in the market. Research the company behind any of the high yield savings accounts that you're considering. Make sure it's FDIC insured, and just be informed about inflation rates and probably be prepared to move your money elsewhere that it will be more valuable to invest and grow it over time. But even more importantly, sis, remember that it takes time and consistency to build wealth. The best time to start was yesteryear, okay? And the next best time, right now. Right now. So what are you waiting for? Right now. Oh, and around here, we do it scared. Here are the videos that I said you might enjoy. Check it out. Check it out. Check it out.